discourage, in effect, loans to small business, and all of us here are besieged by people who want to start or expand a business and aren't able to get a loan, and all of those arguments are made on the basis of employment. I think the chairman illustrated well an odd paradox, and that is, in every other area, to be a really staunch Republican means you have to be in favor of cost-benefit analysis. We've had at least a dozen votes on the floor about whether we require cost-benefit analysis for this or that agency. So anxious to say an environmental regulator shouldn't just look at how much cleaner the air can be, but what effect is that going to have on the cost to the economy? And the dual mandate of the Fed is, in effect, a required cost-benefit analysis. The benefit, or hoped-for benefit, of any easing is to provide additional employment. The cost is an increase, at least in the risk, of some undesirable inflation. Likewise, tightening, the risk is the possibility that unemployment will go up, and the benefit is hopefully a reduction in the risk of inflation. So I think what we should do with the dual mandate is rephrase it as a cost-benefit analysis. That is to say, every time you're seeking to reduce inflation, look also at the cost to employment and vice versa. And I think that a 100-year-old agency should modify its lingo to meet current political needs. Which is to say, I think we should have a dual mandate, and I'm happy to rename it a cost-benefit analysis, or a trip to Disneyland, or whatever other name we want to put on it. Mr. Goodfriend, you spoke of the AIG bailout in such glowing terms that you disparaged those who would even criticize it. That was done, I believe, under Section 13.3 of the Federal Reserve Act, which allows, at that time, allowed unlimited loans by the Fed. Now there's a provision that we added in Dodd-Frank that says you can do that for general economic effect, but cannot make loans under 13.3 for the purpose of propping up, say, a company named AIG. Should the Federal Reserve have unlimited authority to use unlimited funds, well above $85 billion perhaps, for the purpose of bailing out the creditors of a particular financial actor?
No, clearly not. My point there was that that giving the Fed the latitude, independent latitude, to use its balance sheet to make credit available to private entities on any means is not a good policy, because the boundaries are not clarified between what the Fed can do and what the Congress can do. And ultimately, and I'd said this long before in work, the Fed will be drawn into situations where it will overreach, and the Congress, for political reasons, will have to say, no, that's a mistake. Well, and when the public sees the Congress and the Feds at odds in crisis, that creates an increase in the saving rate, which is a disaster for employment. So my point was about
I want to sneak in one more question for the panel, and that is, nobody's proposing to put the Open Market Committee on C-SPAN. Thank God the Democratic caucus is not on C-SPAN. But what harm would be done to have an audit and continuing audits by the GAO of the Fed? Does anybody have an answer? Ms. Rivlin?
Well, in the first place, in the usual sense of audit, the Fed's books are audited. That's clear, and I don't think the public always understands that. What this other use of the term audit is, I think, sort of an independent study to second-guess them on monetary policy. And there are lots of those, actually, that are done. I'm not sure commissioning the GAO to be the official kibitzer on Fed policy is particularly useful.
And should we somehow exclude the international transactions of the Fed, or are those the ones we most want to report about?
Oh, we should know about international transactions as we should know about all kinds of transactions.
Time of the gentleman has expired. The chair now recognizes the gentleman from California, Mr. Campbell, Chairman